Hello and welcome back to Wealthwise. In today's episode, I would like us to review shortly the differences between treasury bonds and treasury bills and when each is ideal for you, or at what point would you opt for a treasury bill, or at what point would you opt to take up an investment in a treasury bonds. Now, both of them, the bills and the bonds, are investment with the government. They are government securities. The government is borrowing from us, the public, or is borrowing from you to meet its budgetary allocation or to carry out its infrastructural developments. With the treasury bonds, this is a long-term investment. It has a short-term to long-term investment. It can either be 2 years, there could be a 1-year treasury bond, to as long as 15 years or even 25 years or even 30 years, by the way, right? The treasury bills, on the other hand, these are short-term investments. In the Kenyan market specifically, they are issued for 3 months, 6 months, and 1 year, right? So that is our first difference between the bills and the bonds. Now, with the treasury bills, after they're short-term, they are sold at a discount. At a discount in the sense that you gain your benefits at the beginning of the investment. In other words, when you are investing worth 1 million, when your investment amount is 1 million, is worth 1 million, you will put your bid at 1 million, being the face value of your paper. But when remitting money to CBK, you'll remit less the interest amount. If you're investing 1 million at 15%, CBK will ask you to remit 850,000 shillings, of course, plus withholding tax. When remitting money to CBK, or when remitting money to the borrower, you will remit the face value, your bid amount, less the interest you would have earned over the duration of that paper. Now, one thing that is coming out, one thing that you'll need to understand is that treasury bills are taxed at 15%. With the same way, the treasury bonds are also taxed at 15%. However, the infrastructure bonds are not taxed, and the long-term bonds that goes beyond 10 years are taxed at 10%. So treasury bills, all treasury bills are taxed at 15%. They have a withholding tax of 15%, and treasury bonds have a withholding tax of 15%. Some, the long-term ones, have a withholding tax of 10%, while the infrastructure bonds are tax-free. How will you know the bonds which are taxed at 10%, 15%, and which are tax-free? CBK will always communicate to you at the point of issuing the prospectus. Like, we're expecting a prospectus this week for the auction of April. So when CBK will be issuing a prospectus, they will communicate to us at what rate that bond will be taxed, whether it is free, 10%, or 15%. All treasury bills, though, are taxed at 15%. They carry a withholding tax of 15%. Okay? Treasury bills are ideal for short-term investments. Treasury bonds are ideal for both short-term and long-term investments. The bills are ideal for short-term investments because they have a maximum tenor of 12 months. The bonds are ideal for long-term investments because some of them have a long-term tenor. Now, I'm saying the bonds are also ideal for short-term because it is possible for you to have a short-term goal when investing in treasury bonds. How is that possible? Remember when I was telling when the rates were at 18% and I told you that rates are coming down. Now, if you had a short-term objective, it's possible for you to have bought that paper. It's possible for you to buy bought the treasury bonds when the rates are just about to drop, and then once the rates have hit the ceiling, the floor, like they are at now, you can sell it at a premium. So that will help you to meet some short-term objectives. Okay? You can buy them, and then a few months down the line, once we have a rate drop, you sell it at a premium and make a capital gain. So that means that with treasury bonds, you can either make capital gains or coupons, or you can make both capital gains and coupons. Those are benefits of investing in treasury bonds. With the treasury bills, we don't receive coupons frequently, but we have the capital gain. So the treasury bonds, then you can use it to earn passive income for consistent cash flows by bond laddering. The treasury bills, it's a short term, it's 1 year. So making consistent cash flows from the bills will need heavy investments and more frequent investment for you to make the capital gains. I mean, for you to make consistent cash flow with the treasury bills. However, with the bonds, you can easily make a consistent cash flow through bond laddering. Bond laddering is where you invest, you layer your bonds in a manner that you frequently receive cash flows from your investment or from your portfolio. So it is quite possible, it's easier building a cash flow ladder or a ladder with the treasury bonds as opposed to the treasury bills. Now, the treasury bills are not traded in the secondary market. If you need your money back, you'll have to go back to CBK for rediscounting. The treasury bonds, on the other hand, you can either go back to CBK for rediscounting as a last resort, or you can sell it in the secondary markets. Okay? It's also important to note that treasury bills are auctioned weekly. Like literally every week you have a chance to invest with the government. While treasury bonds, on the other hand, are auctioned monthly. So if you're buying from the primary market, that is, if you're buying from CBK directly, you can buy a bond literally every single month from CBK, or you can even buy it from the secondary market as frequently as you want. But with the bills, they are auctioned weekly, like literally every single week they are auctioned and you have a chance to invest with the government. Okay? Previously, the treasury bills, you needed 100,000 shillings to invest, but now you need 50,000 shillings to invest in either the bills or the bonds, and your investment must be in multiples of 50,000 shillings. I felt the need to share at a high level the differences between the bills and the bonds, so that at least as we make investment, we have some information at our fingertips, yeah, which will help us in making some informed decisions. Thank you for staying around, and until next time, see you on the next video.